Are you waiting for the real estate bubble to pop, burst? What does a price correction even mean? Stay tuned. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you could join me here today. A lot of people have said that, and they said this to me, I will buy when the bubble bursts. But what I find is that that's very surface level talking and, kind of wishful because that's what they ultimately want, right? It's not what's actually happening. And there's no real kind of concrete metric to what they mean that, when a bubble is going to burst. So I want to take this week's episode to show you what a bubble bursting may actually look like and give you a little bit more context and numbers and attach that to your thought process, quote unquote wishful process, and see what's going to happen, right? So at the current time of shooting this, the November numbers just came out, but I'm just going to use the previous months and saying that the average GTA price right now is about $1.1 million. And I'm also going to go into the micro market trends of the most popular kind of real estate types, being the 416 detaches, the 416 condos, and the 905 detaches. So what I'm going to do is list all the prices over here and show you on a sliding scale of what the price correction may actually mean for each one of these single markets, right? So here are the micro markets and their current prices on top of the GTA or average. So the 416 detached is $1.78 million. Oh yeah, we're there. The 416 condo is about $745,000. The 905 detached is at a whopping $1.45 mil. Since we're talking about bubble burst and not like a little blip, let's just get straight to the point. 20% drop, bam, like that. Textbook correction, that's what a crash is. So where does it take prices right now? Here is what it looks like. Your average GTA will be about $909,000, which puts you back February 2020 prices, which means anyone who bought before the pandemic is kind of immune to these price crashes. Crazy, right? 416 detaches, 20% correction, puts us back 1.43, which is May 2020, right in the thick of pandemic. 416 condos, about $595,000, which is a little bit of an outlier, but puts you back March 2018. And the 905 detaches sets us back to 1.1 mil, back to December 2020, after pandemic. You can see that a 20% price correction essentially puts us back in all the micro markets no more than 2 years with the exception of a condo. Or a different way to look at this and different angle is prices have gone up 10% each year because that's crazy, but it's not normal because GTA's averaged 6% a year in the last 42 years with the ups and downs. So my question is, if you're quote unquote waiting for the crash to buy, is a 20% correction gonna make a difference to your affordability? This is also before the fact that nobody has the courage or the cojones to buy when a market is actually tanking and crashing. I saw this firsthand during the pandemic and in 2017 before the foreign buyer tax, right? Less than a handful of my clients had the courage to go and buy stuff with me, which is, again, normal because 99% of people are very emotional when it comes to buying real estate. But that's what I'm saying. Will you be courageous enough to do it at that point? So if this is the type of real estate content you enjoy, make sure you help us spread the knowledge out there, smash that like button and subscribe to the Prime Properties channel and share the video with all your friends and families, anyone who you think is interested in real estate. Because every week we talk about real estate content that's real because we want stuff that matters to you and be honest and transparent so that when you're like, oh, you know what, I'm gonna make a real estate move, whether it's buying your first home, moving up or investment property, like, I'm gonna call Zen, he knows what he's talking about, and strategize kind of what the plan is for your future, right? So that's why we're putting all the content out there. So you can use it on the link right here. So back to what we're saying, right? If you are the ultimate real estate bear and you hate real estate, but you just need a roof over your head and your crash metric is call it 30%, here you go. Average GTA, $795,000, back to March 2019. 416 detaches, $1.25 million, back to August 2019. 416 condos, $521,000, back to February 2017. Again, the outlier is the 416 because there's a lot more supply of it and prices don't go up as fast as a piece of land. That's why I always say, buy land if you can, with the house on it. 905 detaches, $1 million, back to February 2020. And I remember that month very vividly because it was right before the pandemic. But the reason I remember is because I saw all the trends and the prices skyrocketing due to a low inventory and we broke $1 million again. And who would have thought the pandemic would have caused the 905 detaches to blow up, explode in pricing, up 30% in about 18 months or so, right? Absolutely insane. Also, I would like to note that the 905 detached at that point was at $1 million before in 2017, before the foreign buyer tax, and took kind of 3 years to recover. So you gotta keep that in mind, right? And now these are the numbers at a 30% increase, and really outside of the condos, it took us back 2 years, which means if you were on the sideline or you listened to CMHC's prediction during the pandemic of a 19 price drop, you would have saw a 50% swing to the other side, and you could very much be priced out if you listened to the wrong people, right? Oh, silly CMHC. Came out too strong, but I know where they're coming from. Now here are the numbers at 40% correction. GTA, $681,000, February 2016, 4 and 6 detached, about $1 million. February 2015, 4 and 6 condos, 446K. September 2016, and the 9 and 5 detached, 870,000, back to April 2016. And here are the numbers at 50% correction. Average GTA, 568,000. That sounds crazy to think about it right now because that only puts us back December 2014. The 4 and 6 detached, 890K. January of 2014, condos, 372,000, back to January of 2014. And the 9 and 5 detaches back to 725,000, which is April 2014. So this is the group that is the closest together back into about 2014, which is a 50% crash. Call it almost 8 years. That means prices have doubled the last 8 years, or they would have gone up 9% compounded per year from a different perspective. Right? Those were the numbers and they don't lie. And if you're on the sidelines constantly saying that you'll buy when there's a crash, you really have to ask yourself, if one does happen, I'll just give you the benefit of the doubt, are you going to be courageous enough to buy when it happens? This is what I know. While I'm bullish on the direction of real estate in the short term, call short term 6 to 12 months or so, I'm always prepared for the worst case scenario in case a crash does happen. Because let's be real, this is really, really big bubble. I just don't know how it's going to blow up. This is where being a cash flow positive and portfolio really gives you a big safety net for investors. And if your cash flow is strong enough, you're protected from interest rate hikes, vacancies, and market corrections, right? Because you can ride it out. So I will continue investing in real estate because, let's be real, what's going to do better than real estate right now, other than say Bitcoin or your next dog meme crypto, right? To each their own, right? If you're watching this because you're looking to buy your personal home, you really just have to ask yourself this question. How safe is your job or your source of income if something in the economy were to blow up? Because if real estate prices come crashing, I bet you almost everything else will come crashing down again with it, because real estate is such a big component of Canada's GDP. And you gotta think, there's nothing risk-free about this world. If you step out of your home, go drive a car, that's not risk-free. Someone can hit you, right? We just have to make an educated decision on what's to come. And I know that right now there's 1 month of inventory and we're likely to see less. I can't see prices coming down until we see at least 5 months of inventory, which means we have to see 5 times the amount of listings while demand goes down or stays the same. Can this happen? Absolutely, yes. But do I think so? No. But even if I were to joke and make a prediction that, this whole interest rate hike from Scotia were to happen and see a full 2% increase by 2023, and let's just say that happens, I wouldn't put more than 5% chance that it does happen. So the other probability of the 95% of it won't happen is just my risk analysis, right? So I'd rather bet on the 95% than the 5%. You just can't let fear projected by the media dictate what you're gonna do. Other question is, where's you gonna put your money, right? In real estate or some economist's prediction who's been wrong many, many times before, right? Kind of like what happened with the CMHC prediction during the pandemic when there's another 50% swing, 90% going down, 33% going up. It's just a probability game, right? It's just there's more asymmetry to buying real estate. It's kind of how casinos always win because they always have the probability stacked against you. So what you decide to do is ultimately up to you. I just make educated decisions personally for myself and my clients for the biggest chance of success. And right now, real estate in the short term is still going to go strong and will continue doing that way. A great saying goes like this: a broken watch is still correct 2 times a day, right? These real estate bears and economists will eventually be right. But how far up will prices go before we see a 20-30% drop? Our 20% drop puts us back 2 years. But of course, to each their own, right? So if you want to see what strategies we are using with myself and my clients in the real estate market and want to stay on top and also be able to win in this game, right? You can book a call with me using this link right here. It's www.chavzan.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.